Hey Alpha fam, let's do a quick market update before we begin. I do want to say that nothing in these videos are financial advice. Everything is for educational purposes only. It's just my own analysis on the market. Also, if you're new to this channel, if you can please like, comment, and subscribe, we really do appreciate the support. Let's get into the market, guys. So, yesterday was the FOMC, and honestly, guys, it was a nothing burger. Like, it was probably one of the most tame, laid back FOMCs I've ever seen. We didn't get rate cuts. We didn't plan for rate cuts. Nobody thought we would get them, and we didn't. The more of what people were looking for was the tone, all right? And it was just very, I guess the best way to say was dry. All right. I mean, it was really just cut and dry. I mean, he shot down some questions, didn't want to make comments on the political stuff, made a couple comments about gold and silver, saying that they're monitoring them. But for the most part, guys, it was very tame. We didn't really get a negative reaction. We didn't get a real positive reaction. Yeah, we ended the day slightly in the green, but I do think that that is probably what we would consider like a local high, because now I think that there is a chance that with that FOMC behind us, if we want to come back down for a couple of days, again, guys, I think what everybody's kind of waiting for right now is to see which direction the market makers decide to take this thing. Whether they want to, and we've been talking about it for the last weeks now, whether they're going to complete the spring or if they don't have enough momentum to do that and they're going to allow this thing to start taking off after they chop sideways for a bit and probably, try to wear, participants out. Because that's essentially what they try to do, guys. They try to get people to capitulate a couple of ways. One, if they can liquidate you, that's their go-to method. But another one is time capitulation, where they will just drag things out so long, where people get so frustrated that they give up, lose conviction, and leave. All right? You don't want to be that person, guys. I'm telling you right now, if you've been in this market last year and you're even down, 60, 70% on your bags, all right, I know extremely frustrating it can be, especially like losing your confidence. So like these are the times where you have to make a decision. Are you holding the right stuff? All right, because these are great times when you're in these accumulation ranges to get out of things that are just not holding mind share, don't have an actual utility, and just aren't probably going to catch a bid. All right, there was a lot of projects last year that were doing fantastic that are just not doing anything anymore. And if you're still stuck in those projects, guys, obviously nothing I give anybody on here is financial advice, but rotate out of the losers and go into the identified winners, all right? Not everything's going to run this cycle, guys. You have to be very selective about what you hold, all right? You have to make sure that you're not, I tell even the guys in my community all the time, if you can't give me a thesis on a project within 30 seconds, I probably don't want to hold it, all right? So I'll give you an example of a project that I like a lot, all right, guys? We'll do Curve, all right? And this is my thesis on Curve and why I like Curve a lot. Curve is a stablecoin protocol. What it is a liquidity provider for stablecoin protocols, all right? Not only is it a liquidity provider for stablecoin protocols, it's also a swapping platform between stablecoin to stablecoin. My theory is every bank is going to adopt a network. Every network is going to have a stablecoin on it. So, for example, if you have a bank that adopts Solana and they're using USDC, and then you have another bank like Bank of America, they adopt SUI, and they're going to use USDT on Tether. Well, when these two institutions need to communicate and send money back and forth, there has to be somebody in the middle to provide the liquidity and allow that transaction to happen. That's what Curve does. That's where it is going to be able to put in a pivotal point where I think, as far as not only with DeFi, also with stablecoin protocols, it's in two of the most strongest narratives this cycle. I think it's going to have a very good opportunity when things turn around to catch a bid. And every time the market starts to run, Curve is one of those projects that do extremely well. All right. Last time Curve caught a bid when it ran out of here, it did like a 5x extremely fast. I think it was like 30-something days. If you actually take it from the break of this 50 when it did the retest and all the way up, this thing did 417% in 24 days. All right, guys? And that was the meat and potatoes of the move. All right? So if you can't do that with the projects you're holding, like if you're holding a project and you can't break down the reason why you're holding it, why you're bullish on it, what it does, and the whole thesis within like 30 to 60 seconds, this is your chance to rotate out and go into the winners, guys. All right? There's not going to be a 2021, 2017 cycle where just everything runs. Yeah, you might have stuff that, appreciates in value, especially in like a full bull frenzy, but they're not going to run as much as if you were very selective in selecting the tokens that have held the mind share. All right. And again, if you have a problem doing stuff or finding projects or like getting things to invest in, guys, this is why you need to do your due diligence or join communities, guys, like Alpha Syndicate. All right. I give guys my full breakdown of my portfolio, everything I'm investing in, my entries, my exits, the whole nine. So, with that being said, guys, looking at the market, all right, we definitely need to get some momentum. All right. I am looking at this on like a little bit of a smaller time frame, guys, just to kind of give you guys an idea of what I'm seeing right here. And then I don't really, like I said, looking at this from a technical perspective, yes, we are making higher lows. Obviously, if we break this would be a break of structure. So this like little uptrend that we've got will, officially be broken back down. I think that they're going to want to sweep liquidity, guys. I just really think that that's the case. This $90,000 level has been really, really, really big resistance. It's been really big resistance for us, guys, and we've been struggling to get back above this level right here. You can see every time we've come back above it, we've rejected. And again, we need to get some momentum. When we broke above these yesterday on the 4 hour, I said, I think this is a liquidity sweep prior to the FOMC. Once they do that, you're going to see the inducement or the liquidity trap. They're going to trap people off, and then they're going to dump the market back down. And that's exactly what we've seen. We do have some other data points coming out. I think the big one right now that everybody's waiting for, including myself, so we've basically, once you remove the FOMC, I'll be surprised we didn't dump as hard into the FOMC as I thought we would, which was a little refreshing. But I think what everybody's still kind of waiting for right now and on edge is for this, which is another reason why I think we started to see the market perform better, because you can see this thing skyrocketed up to 80% for the government shutdown on Saturday, and then it dropped. All right. This is very important because if they don't shut the government down, all right, this is going to remove another FUD event that's been kind of looming over the market. There's a few of these different events. We had the FOMC, we've got the Trump tariff Supreme Court decision that's been kind of looming. You've got the tariff stuff that Trump's been going back and forth with, like Canada and these different countries. A lot of that's starting to cool down a bit. But then you also have, which is the government shutdown, all right? And then once you start removing these events and we start getting past them, then the only thing that they're going to be replaced with, because the market needs a North Star or guiding light, are going to be the different things that are coming up in the next couple of months. Jerome Powell being replaced, continuation of quantitative easing. We've got potentially stimulus checks. This is a big reason why both the government shutdown and the Supreme Court in the stimulus check, or the Supreme Court in the tariff decision, whether they're legal or not legal, is going to have a direct impact if we get those stimulus checks, guys. This is why people are still a little on edge. And these are also events that I think the market can utilize to be able to force prices down to lower levels to be able to sweep. Whether they're able to do the full-on spring, or if they just want to kind of come back down here to some of these lower levels and to some of these order blocks, like right down here. We got an order block right here. You can see it's been pretty significant. Every time we've come into this general area, it's resulted in a move up. Even if you extend it over to this, you can see this level right here has been pretty significant, guys. All right. This general area. All right. So if they want to bring it back in there, I think there's a bit of liquidity down there. I think it would also swipe out some of the longs. It would make general sense if they decided to want to come back into that general zone. If not, there's also a chance, because there's so much bearishness going on. Guys, don't forget, they're also going to sweep the liquidity to the top. I just think that if we're going to get and start a bullish uptrend and they know this, it makes logical sense for to go and attack the liquidity below first, because if something happens and a super bullish event happens or whatever and the market takes off, they might not physically have the power to get that price all the way back down to that level and sweep that liquidity, guys. Always remember, this is a cat and mouse game between the market makers, exchanges, institutions, smart money, retail traders, and hunting liquidity. All right? It's just, that's what it is. Market structure is created by literally liquidating longs and shorts. Straight up. That's how crypto market structure is created. 70 some odd percent of the crypto market is dominated by perpetuals trading. This is the reason why we have so much volatility. All right, guys? So another thing I like to look at on top of, not just generally getting an idea of the crypto markets is obviously you want to look at TradFi. All right? TradFi is still doing pretty well, guys. Still, obviously, we're waiting for the U.S. market to open, but we can see this is both the S&P 500 and the futures S&P made new all-time highs. NASDAQ attempted, did it make it? No, it's almost there. It's almost at new all-time highs. You can see it's broken above this like resistance zone right here. Obviously, this is the major area of resistance it needs to break above, and if it does, and which I think it will, I think then we'll see NASDAQ, make a new all-time high. All right. And then also, guys, this is going back to some of the data points that we have coming out soon. So next week, we have a couple of data. We got PPI coming out, which is important. That's on the 30th, which is tomorrow. But the one that I'm looking at is ISM Manufacturing PMI. The reason why, guys, is this chart right here. And a lot of people don't even pay attention to this. But this is a very important chart for your bull run. And what I mean by that is this is the ISM purchasing manufacturing data. So like this is basically manufacturing data. And the TLDR is if this thing is going and expanding above 50, the economy's expanding, and this is when you always see a bull run. When it goes below 50, you never see a bull run. And I'll show you. So 2021, you can see when the ISM expanded over 50, this is the 2021 bull run right here, guys. All right. You can see right here in 2017 when it expanded over 50, this is the 2017 bull run. Guess what? Same thing in 2013, guys. And then it's very coincidental that you can see both times we've had runs in crypto, where altcoins had runs, which was the going out of the end of 2023, going into the first like Q1, Q2 of 2024. You've seen this thing basically tap 50 and come back down. And then at the beginning of 2025, going out of 2024, when we had the run last year, this thing barely peeked its head over and then came back down. I think the reason why it came back down, honestly, guys, is because when Trump came in office, he started the tariffs and the trade wars. That had a real negative impact on the market and in the economy at that time. And I think that the ISM obviously resulted in it coming back down. Now we're going to see where this thing's at. What we need to see this thing start doing, guys, is starting to go up. All right? We want to see this thing when this data comes out. You'd see it's kind of been flattening, where it was kind of going down a little bit more aggressive, and now it's starting to kind of flatten out. We need to see this thing, especially like GDP data coming out really good the other day, and like a lot of the economic data is showing us that the economy is strong. Even Jerome Powell said, we can even look at independent stuff like, look, guys, inflation's at 1.23%. So if this thing starts to flatline and starts to curve to the upside, then we could expect probably within the next, this right here is a monthly chart. You can probably expect by the following month or the month after, if this thing starts to tick up, probably leaving out like February going into March, we should hopefully start expanding over 50, and that's when things should start really taking off. Because you have to think also right around March going into April, what's also going to be happening? The market's going to be pricing in Jerome Powell being replaced. That is going to be a very bullish catalyst for the market. I think that combined with quantitative easing, guys, and then when that guy comes into the office, whoever replaces, he's going to come in with the understanding that Trump is trying to get him to lower those rates and to continue with QE. Midterms of next year, guys, this is very important. This all leads back to politics, guys. You know what I mean? The market needs to be doing good. The economy needs to be doing good, because if it's doing really bad, it's going to be very difficult for them to, win midterms. And then with all of the different political issues that Trump's having right now, for instance, the ICE issues in America, and, there's just a bunch of things that are going on. Trump doesn't want to lose midterms because he knows what the Democrats are going to try to do. They're going to try to get him impeached. And I think this would be a catalyst to start a bear market, guys. All right. That could see that also coinciding with the 18-year real estate cycle, but we'll get into that in another video, guys. I'll be making a macro video that kind of breaks down some of these cycles, these liquidity cycles, and some of these different topics that I break down in these videos. I know some of this stuff might be a little confusing if you're new to this channel. My name's Coach JM. I've been a crypto expert for the last 5 years. I'm a macroeconomic expert. I combine macroeconomics, fundamentals, and technical analysis together to help give me and my community an edge over the market. And if you're trying to learn this type of stuff, if you want to learn all of the different topics that we're talking about, you can click the link below. We'll see you inside, guys. But let's get into this before we end this video today, guys, because right now, I think the market's kind of on edge. All right. It's like very displaced 50-50 right now. All right. I see half of the market's bearish. I see half of the market's bullish. I see some of the guys that have been bullish are starting to kind of convert bearish. And rightfully so, guys. I get it. It's been a very frustrating market this last year, but don't lose conviction now. You don't want to come back and a year from now, 2 years from now, 3 years from now, look back at this time and be like, wow, I sold everything because I was frustrated, and then it took off. Crypto is not dead. It's not dying. It's not going anywhere. And you guys have to understand, 2023 and 2024 were really good years for crypto. All right? Regardless of how well gold and silver have done, Bitcoin has still outperformed every single asset by an amazing margin in the last 10 years. It's had a bad year, guys. Crypto had a bad year. And the reason it had a bad year, I don't think 2025 was ever supposed to be the bull run. I think it was extended to 2026. Remember, guys, this is all the debt refinance cycle. They have to refinance the debt. All right, guys? And when COVID happened, they went through basically the largest interest rate hike in human history and the most restrictive monetary policy in human history. And it took them a long time to get off of that, guys. It took them longer, I think, to wind that down than they initially anticipated, which has extended everything a lot longer because everybody had this 4-year cycle, 2025, we're going to Valhalla in their head, and when it didn't happen, everybody's just now wanting to give up and leave. I think that's the exact opposite thing you want to do. I think this is when you want to really dig in, learn, join communities, get the right information, position accordingly, so you can take advantage of the largest transfer of wealth in human history. This is the largest transfer of wealth in human history is happening, guys. Whether you believe it or not, it's really happening. So, with that being said, guys, I'm going to be keeping you guys notified. Keep your notifications on. Again, if you're new to this channel, if you could please give us a like, comment, and subscribe. And again, if you're trying to learn this stuff, click the link below, guys. We'll see you inside.